Street is David Kinitsky, who's a director at SecondMarket, and you're the general manager of a Bitcoin investment trust. Let's start with your background, and I understand you're a trader or a trading experience. So why don't you tell us how you ended up in Bitcoin?
Yeah, I'm actually a reformed attorney. Was a corporate and securities attorney doing M&A deals, and then I've been at SecondMarket for about 5 years now, and helped build and manage the business we had there for pre-IPO private company stock that I guess we were in the press quite a bit about. And working with our founder and CEO, Varick, I've been involved in Bitcoin for a number of years, helping him with a lot of his angel investments and talking to a lot of entrepreneurs buying Bitcoin, and now heading up this business to kind of bring it to the professional institutional investor class.
Right, so when you say this business, you mean the Bitcoin investment trust?
That's right, as well as our trading efforts.
Okay, so do you want to explain what that is? Now, I know what an investment trust is from my sort of financial background, but many people here may not understand what you mean by open-ended, so and who it's for. So what is it, and who's it for?
Absolutely. So in all of SecondMarket's other business lines, our primary customer base are professional individual investors who are qualified, as well as institutional investors. And we started getting questions from them about Bitcoin about a year ago or so. And so we set out to figure out what an appropriate way for them to access and invest in Bitcoin and the Bitcoin ecosystem would be. A lot of them said, you know, some of the companies are too early stage, and venture funds already kind of handled the venture side of things. We want to buy Bitcoin, but that's challenging for us for a number of reasons. One, we have to figure out how to buy and sell and hold Bitcoin, and that seems easy if you're tech-enabled, if you're younger, and if you're not doing it at scale. But if you're talking about someone who works at a firm, investing firm capital, and investing millions of dollars, that is a challenging endeavor, because the marketplace is very disjointed and international. You have to send a wire to Slovenian bank for Bitstamp, to Japan for Mt. Gox. That is huge counterparty risk, and these teams are not well capitalized. They're just a couple folks. That's not tolerable to a professional or institutional investor. And then furthermore, it's not very liquid. I mean, these markets are all over the world, so if you're deploying $5 million of capital, that's going to take you a lot of time, or it's going to destroy the price. And so what we've done, and then also you own Bitcoin, okay, now you have to store it, figure that out. And then, or trust someone else to do it, that's another issue. And then finally, you show it to your CPA or your financial advisor, and what are they going to do, right? So what we said is, well, what we're going to do is we're going to create a fund that holds only Bitcoin, so the price, the exposure is really just Bitcoin price. But it's going to issue restricted traditional private securities, so CPAs, it's titled, so it's actually eligible for certain types of brokerage accounts, such as self-directed IRAs and 401ks. And because it's issuing the securities, and then on the back end we have a trading team that is sourcing Bitcoin from all the exchanges as well as a number of off-exchange sources, we can handle a $5 million investment in one day without moving the price. So for all those reasons, it was a lot more appropriate for people who have ultra high net worth individuals as well as institutional investors, and to get structural and legal on it. It's structured very similar to the Spider GLD ETF. Of course, it's not public, it's not exchange traded, but it is a Delaware grantor passive trust that just holds Bitcoin. It's not operational in any way, and then there's an external kind of sponsor as well as an external trading team that sources the Bitcoin.
Yeah, I was actually about to say, is it a tracker? It's like a tracker.
It is similar, yes.
If you're not a tracker, is when you track the index on a particular market, so you just you blend the various.
That's right. There's once a day. There's a net asset value per share struck that is basically a 24-hour volume weighted price across all the exchanges, and it's meant to just track that price, so the price of Bitcoin.
So if I ask you how the fund has performed, it's kind of mute, really, isn't it? Because it's a tracker. So you're saying, well, we're not saying we're investing this for you.
Yeah.
We're giving a facility to track the price.
That's right. We're not doing any trading activities in the fund. We're doing arbitrage opportunities. It's just tracking the price.
Are there any competitors?
Yeah, there's some direct, and there's always indirect competitors buying Bitcoin, of course. But directly, there was a fund called the Bitcoin Fund out of Malta, but they're not catering towards more professional institutional investors, and they haven't really had much traction in the US. They're Malta-based and European-focused. Then there's been news about an offshoot from Fortress having a fund out in San Francisco that's gotten off the ground, but it's Fortress principal capital money and kind of a different target market, fewer folks, bigger check sizes, private, discrete, more like private wealth kind of traditional private fund status.
Okay, so what's the minimum buy-in on this? What's the minimum deal size?
Yeah, so ours is much lower. It's $25,000, but still higher than obviously Bitcoin or public securities. And you do have to be an accredited qualified investor.
Right, which is a legal definition of.
Legal definition, I believe it's income of 200 grand for the past couple of years, or net worth of $100 million or $1 million. Apologies. $1 million.
Okay. Okay, so let me ask you a slightly different question. So I know you have a trading background. You trade derivatives, right?
Well, I have traded them. Currently, we have a team that I oversee a different part of the business that is our trading team that does that actively with Bitcoin.
So, I mean, I do see some options trading. I see some various sites that you can do options for you. So how far do you think Bitcoin will go in conventional capital markets in terms of derivatives and everything else?
Yeah.
Are we going to see everything? Can you do everything or not? Or
Yeah, I think so. I think so. Right now, the sites you see are just like the exchanges and other infrastructure. It's nascent. It's immature. No one, again, professional institutional investors are buying the derivatives that are on the market right now due to counterparty risk and all sorts of other things. But we think that will happen. When we look at the trajectory of Bitcoin, we view it as 5 stages. In the early days, in 2008, 2009, really just hackers playing around, obviously the crypto anarchist element, but really just hackers playing around with something that was cool and kind of a tool. Then the next kind of people started assigning a value to it with the Silk Road into 2011, and people started developing services on top of it. We're currently in kind of an entrepreneur and venture capital stage where you're seeing venture capital money and people building businesses on top of the protocol. But we think the next stage that we think will happen towards the end of this year and into 2015 will be the Wall Street phase and hedge fund phase, where we have a lot of conversations with every single wirehouse and bank has a strategy team that's devoted, or not devoted, but part of their role is figuring out their Bitcoin strategy. And so that's the 4th phase, and then the 5th phase, mass adoption later, obviously.
Okay.
But that Wall Street finance phase, that will have all the derivatives, all the different financial services that they offer. I don't see why they wouldn't do it on top of the Bitcoin protocol as well as other things outside of the financial scheme, such as chain of title and other uses for the Bitcoin protocol. It's important to, of course, remember that the digital currency and financial infrastructure is just the first use case of the network.
What do you mean by that exactly? What's the second use case?
Well, I don't know, but it's important to remember is the Bitcoin, as some people have the big B, that's the network, the protocol, and then Bitcoin little b, the digital currency. This protocol is just a distributed ledger system that can be used for anything. Currently, Bitcoin in the first use case was a decentralized digital currency and a payments network in effect. But people are starting to build things on top of the protocol that don't have to do with that necessarily. Things like real estate chain of title could be kept track of on the blockchain. Things like smart contracts could be enabled by the blockchain. There's a whole host of other use cases for the protocol itself. It's just that the digital currency and financial transaction network is the first use case for the protocol. Okay,
so actually you're saying it has a far wider scope than the current.
Far wider.
Far wider scope. Okay, so you're saying it's going to find its way into capital markets in the same way that conventional currencies do, which means the regulator has got to address this in some way.
Mm-hmm.
Because you can't, you mentioned hedge fund funds. Now, they're obviously regulated entities. So how does the regulator fit in with this then? So you need the regulator, is that the SEC here?
Well, it's unclear, not totally defined. I don't think it's the SEC. Okay. The one that's spoken the most about it on the forefront has been Treasury via its FinCEN agency, the Financial Crimes Enforcement Network, in the U.S. And it's kind of piecemeal across the globe as to how people are kind of characterizing it. You see across Europe that some are calling it private money, some are calling it a commodity, some are calling it a financial instrument, some are calling it an asset. So there is no consensus right now as to what this is or how it should be regulated. In the U.S., you have all these other, we had the Senate hearings in 2013, November or so, whenever that was, and you had letters submitted from the Treasury, from the SEC, from the CFTC, and all these other people, and nobody stood up and said, we're the regulator for this. The closest to it has been FinCEN, which is an agency of the Treasury that regulates money transmitting businesses. And again, it's because I don't think you see someone regulate the protocol, just like you don't see someone regulate HTTP or SMTP protocol for the internet. what you see is people regulating the use cases. And so this first use case of a financial transaction network is being regulated like current money transmitter businesses in the US, which is regulated by FinCEN at the federal level and on a state-by-state level with each state's regime. And so that's currently how that use case is being regulated in the US.
Right. So I suspect you're somebody who thinks Bitcoin is the end game. Or not?
I happen
Or is it something Bitcoin? Is it something else?
I happen to believe, it depends what you're referencing. I happen to believe that, yes, Bitcoin is the end game, and for a couple different reasons. If we're talking about what is the end game for a single global, distributed ledger technology protocol, if there's one, yeah, it's going to be Bitcoin. I happen to think there's going to be room for other ones, though. I think you can see one dedicated to certain use cases.
Right.
So I think that there is room for one, so I don't think that it's Bitcoin and Bitcoin only. However, if you're talking about the leader, and if you're talking about the biggest, and you're talking about the most global, I think there will be scale in one. And I think it's Bitcoin for a number of reasons. One, it's important to remember it's open source protocol. It's a software. So if something else has a desirable feature, Bitcoin's going to take it. I mean, it's not like you just could create a competing system that's better and it wins. No, Bitcoin can react, and it's a network. It has that network effect. So the transaction costs for everyone to switch off that network to this other one are far greater than Bitcoin just taking that feature. And so that's one reason. The second one is that there's really, globally and in the US and each country in the world, there's only one class of early adopters, of entrepreneurs, of venture capital money, of angel money, that really goes after stuff like this. And once they get invested in this, they are investing their money, their reputation, their time. And so for that reason, I think that you see this network effect of them wanting this to succeed. And it would be really challenging for another network to destroy Bitcoin or take its market share, whatever your reference we're make, because all those other people, again, would have to switch over the network. That said, I do think that there will be multiple ones for multiple use cases. So I don't think that Bitcoin is the be-all, end-all. I think that Bitcoin is the leader, the biggest, the strongest, the most standardized. But I think that there's going to be a number of other ones.
So it'll maintain its lead, basically.
I think so. I mean, I don't know, but if I had to guess, yes.
Okay. Question. Austin.
Thank you. So you just buy and hold Bitcoin, right? So on a day like today with the volatility and like all, somewhat predictable based on, doesn't it just, you don't have any way to leverage the movement today into, or you're not even looking to trade Bitcoin at all?
So we do have, and I've not been focusing on it, we do have another part of our business that is an active market maker in Bitcoin. The Bitcoin Investment Trust buys and holds passive, totally dumb entity that just buys Bitcoin, holds it, and it does it, and it values it at this single price a day, which is a 24-hour volume-weighted price. So it doesn't matter about all this.
Is that proprietary volume weight, or you just go to like Bitcoin average? Or
I mean, it's I wouldn't call it proprietary, but we don't use like Bitcoin average. It's somewhere in between, but it is using the open data off of the exchanges. But we do have another, business line that's tied into our Bitcoin efforts, which is our trading team that serves as a market maker. And so we're a principal owner of Bitcoin, and we're a principal trader of Bitcoin, and then we're also an agency brokerage trader of Bitcoin, meaning we have Bitcoin that we are willing to sell you to make money for us off of, and then we're also willing to offer the service. If someone wants to sell Bitcoin, we'll do that for you at an advantageous price for a commission, right? So we have that business as well.
And I saw yesterday or the day before you put up that page on your site to actively kind of market to people selling Bitcoin, and some people were saying that, and maybe even internally, somebody tweeted, I think, that you're looking to maybe get the momentum to be ready to create a wholesale exchange, some sort of
We've gotten that question quite a bit. So we are not an exchange now. There's obviously it's a loaded word in terms of the legal and regulatory landscape. It could be seen as like the basis or first step for that, but we're not actively planning that right now. That said, we believe that there's a huge need for a true professional exchange in the world, and certainly in the US. Definitely in the US, but even in the world, even the existing ones, some of them are pretty quality, but they're very nascent, super low-grade technology, not like existing financial exchanges in the big markets. So we think that that needs to happen, whether it's us or someone else. And right now we're doing an analog kind of market making activity, but you could see that as the first step if it does make sense down the line for us to do that, but we don't have any active plans right now to do that.
Let's take another one. Another question over here, please. Thanks, Austin.
My question is around, like, the current brokerage industry is a good parallel to what you're doing, and two things that exist there are custody, right, sort of separating who holds actual Bitcoins, even if you're the fund, and then also, self-directed accounts that allow, like, a Vanguard to let people put their money in your fund. What's the state of that today, and, like, how do you think that's going to evolve?
Yeah, absolutely. So on the custody component, we do our own custody, our own safekeeping there. We had a number of conversations with the big kind of custody folks in the game, the Bank of New York, the BBHs and all that. And it's, they're not ready for it. It's not a big enough market yet. But, we think that they will enter the space, and, we will look to outsource that role as that becomes available. There are a number of other folks who talk about insurance or how to keep it safe and whatever. And there's starting to kind of be that kind of service provider level in that area, but it's not there yet. Certainly not with the counterparty risk that we're willing to tolerate. It's great if you have insurance, but if you only have $2 million in the bank, that doesn't do us much good. So I do think that will develop, just like the rest of the Bitcoin infrastructure needs to develop, but it's not there yet. So we're doing it ourselves, and hired a lot of people and spent a lot of time, a lot of money doing that for ourselves. On the kind of self-directed and brokerage account side of things, we have relationships with a number of the self-directed account providers currently, Pensco, Millennium, some of the other big ones who kind of were at the forefront of that movement a decade ago or so when that became popular. We've had a relationship with Fidelity, a bigger wirehouse in doing that, and they've let a couple people invest through their Fidelity self-directed IRAs, but due to headline risk, they said, hey, we're going to put a halt on this. We think they'll be back later this year, but right now they're not accepting it. So right now you're seeing it in that respect, kind of at a tipping point of where the kind of ones who are more innovative and more agile and nimble are embracing it, and the bigger ones that still have that headline risk and have like a lot of other businesses that can be affected by it, they're a little slower and more cautious. But they're interested, they're looking at it, and just like all the big wirehouses have someone, internally thinking about their strategy as it relates to Bitcoin, so does every payment processor, so does every credit card, so does every brokerage provider, so does every custody provider. All of these people who are affected or potentially affected have someone looking at it.
Okay, we'll take one more. Last question, please.
Sorry, I just wanted to ask you, eloquently stated why it is that Bitcoin, as a living piece of software, can adapt to better ideas that come along and take them into its own system. Why then do you believe there is room? And what other reasons would you have for a different blockchain?
Mm-hmm. I think that when you're developing any product or software, you're developing it for use cases, right? And so it's a matter of where you want to focus your use case time and focus your development time as a result of those use cases. So when you have these kind of like long tail situation, right, where you have these niche use cases, and it's just not worth it for them to allocate their resources and prioritize the features that would enable those to be the best use case, because they have a much bigger market to worry about. So if for example, the Bitcoin network's predominant use case is this digital currency and financial technology network, then some feature that is very useful in a smart contracts context is not going to get prioritized over here, and so you'll have room for a little bit of a smaller one. Yeah.
Okay, Dave, I'm going to call it there. Thank you very much.
Absolutely.
That was fun.
Yeah, absolutely.